Welcome traders. I want to talk about something that comes up a lot in trading, which is using too many indicators on a chart. I'm sure that you've seen some charts that look like they have every possible indicator on them. There are actually pros and cons to using too many indicators. On the one hand, more indicators can provide more information about the market and potentially lead to more profitable trades. However, there are also downsides to having too many indicators. So for one thing, having too many indicators can create a lot of noise on the chart, which makes it harder to see the actual underlying price action. This can then lead to confusion and indecision when trying to make a trade. Additionally, some indicators might even give conflicting signals, which makes it even more difficult to determine which ones you can trust. Another issue is relying too heavily on indicators can then lead to a lack of understanding of the underlying market dynamics. Instead of reading price action and understanding the market's movements, a trader might rely solely on indicators and actually miss out on key information. So what's the argument for using clean charts with minimal indicators? Well, the idea is that by focusing on price action and key levels of support and resistance, a trader can get a better understanding of the market's movements and potentially make more informed trading decisions. So for example, a day trader might have a routine that involves looking at the daily chart to identify key levels of support and resistance, and then switching to a shorter time frame chart to look for entry and exit signals based on price action. This approach focuses on the key elements of the market and allows the trader to make informed decisions without getting bogged down by too many indicators. On the other hand, a swing trader might have a routine that involves looking at a longer term chart to identify the overall trend, and then using a few key indicators to confirm their analysis and identify potential entry and exit points. This approach still uses indicators, but only as a secondary tool to support the trader's analysis of the market. In the end, the key takeaway is that there are pros and cons to using a lot of indicators on a chart. And while they can provide valuable information, too many of them can create confusion and lead to a lack of understanding of the underlying market. So by focusing on clean charts and key elements of the market, traders can potentially make more informed decisions and achieve greater results in their trading endeavors. It's been my personal experience that a clean chart allows me to trade with clarity of mind. I'm of the belief that the ultimate goal of any trader to master their skill progresses to a point where they only have price action and key price levels. But this takes time and lots of trades to build up that much experience. Traders have stated that they reduce their stress from analysis paralysis when they use fewer indicators, and this results in better performance. So that's certainly something to think about. Now, if you are serious about trading and you want to learn more, then get in touch with me on my ambassador's homepage at FXGlobe.